up before it happens, because the market always has a way of telling you before everything happens. So in today's accountability review, let's review what happens in the market and how you'd have taken advantage of it. Once again, we are starting with Nasdaq. As you can see, before the week resumed, we mapped out liquidity on the areas we expected price to react to before going to the upside. We mapped out the previous week low for a draw on liquidity, and it fails. This should have been the next stage before this stage, before price will continue to go up. And these are the areas we targeted on the price delivering. So the question is, how would you have taken advantage of this? So let's start from the week. The market resumed as at Sunday, which is this. This was the redemption of the market. So the market didn't get to this place because as the market resumed on Sunday, it created a new low, which is this low that you can see. The market created a new low. So we had a new low here as the week opens on Sunday. The market didn't get to this place. So the question is, did our narrative was it delivered? Exactly. We mapped liquidity that we want to see price run to these external liquidity, which is the daily old highs, the daily old block, the fair value gap, the older highs and the older highs. You can see how price delivered perfectly into those areas. So how you would have taken advantage of those delivering. As we opened on Sunday, the market created a new low. And then the market opened, rallied, and came back as at Tuesday, took at the low. That would have been the first entry. On Tuesday, first market opened on Sunday and created a new low. So this becomes our new target for entry, since the market didn't open to run out this low that was mapped out before the week. So this becomes our entry, and then the question is, did we deliver? The market took out, if we go to a higher time frame, which was a daily time frame, these areas were mapped out as our target. The market took out this high, took out the other block on the daily time frame, took out this gap, which is supposed to be a gap on the weekly, and then also a gap on the monthly, and then finally came back to the daily time frame and took out this high as at this week. So our entry points on this, for if you are trading more of a swing trader, this would have been our entry point. If this point was missed, we would have gotten another entry using the 15-minute time frame. This was it. The market took out the previous Sunday's low, which was this. After that, you waited for a pullback. The market came back into this pullback, filled the fair value gap. This would have been another entry opportunity. So at the time of entry, this is the first entry, which was Tuesday, 11 a.m. using the New York timing. So another opportunity should have been here, which is also Tuesday around 2 to 3 thereabouts using also the New York timing. So, and we deliver perfectly into the areas that we've mapped out for the week. That was that on Nasdaq. So you can actually see that price wasn't random. It's not a random thing. It was structured. Liquidity was taken. Price delivered from one level to another. So if we move down to the British pound USD, let's see exactly what happens. Starting from the one hedge to see, we also narrated on this, was expecting price to get to these areas and then run to the upside up. These are the zones we mapped out for price to deliver. What happens? So as at this was our previous week low, Yes, and this was it. The market opened on Sunday and took out our previous week low. This is it. That would have been the first opportunity if missed because we don't trade Sunday. So the Sunday took out the low. We start to look for an entry. The liquidity was run. We run liquidity on this particular level, which would have been the first entry. But because we don't trade Sundays, then we got another opportunity to take a trade on Monday on this pullback of this particular level that was run into. Did we deliver to the upside as we mapped out? Apparently, yes. The price run took out the order block on the daily time frame. As we can see, it took out the order block on the daily time frame, took out the fair value gap on the daily time frame, and then ran to the next draw on liquidity, which is the previous a high, an old high on the daily time frame, and almost touching the order block, which we also mapped out on the daily time frame. So British pound USD delivered, and that would have been the opportunity to take the trade if you are trading swing trading. So the next pair we also mapped out this week was Euro USD. Let's see what happened and if apparently we delivered also on Euro USD and the entry opportunity for Euro USD. So again, we opened this week. That should be on 5th, right? Sunday the 5th, the market opened Sunday the 5th with this particular candle. The market also ran the previous week low, took it out as you can see in this particular level. Or the market, the only one that didn't take out the previous week low that created a new low was Nasdaq. As you can see, the market ran, took out the previous week low, respected the order block on the daily time frame that we also mapped out as our downside liquidity point. So it respected the order block on the daily time frame. We get back to the lower time frame, which might be the 15-minute time frame, the 1 head, the 5 minutes, whichever one you trade. And price gave us an entry after taking out that liquidity, which is here. It took out liquidity on this level and rallied up. And then if you miss this opportunity, you had another opportunity also here as the price pulled back to this level, filling all this. If we move to the 4 hedge, let's see what that area is. We can see that there's a fair value gap on this. The market came back, gave us opportunity on Monday, 9 a.m. New York time. Again, the same Monday, 1, and again, the same Monday around 21 o'clock time, gave us multiple entry opportunity before rallying to the upside of the market that we mapped out. So the market respected, as in took out the other block that we mapped out, took out the previous highs we mapped out on the daily time frame at the moment, and also fill the gap which is supposed to be a weekly gap. As you can see, the market respected all these areas, but didn't get to the last area that we mapped out, but all this area has been respected this week, just to show you that it's not a random. The market never moves in a random area. Market is always looking for something. It's going from one point to another point, and that's the reason we map liquidities on those areas that the market might be reaching for. It could be the downside, it could be the upside of the market response will react to a particular place before going to its direction. We map liquidities on Sundays, and then we review what happens after the week ends. These are the areas we've mapped out liquidity for this week, and this is exactly what happened on Nasdaq, on British Pound, and Euro USD. This week again, Sunday, we are going to be mapping out liquidity on the areas we expect price to run to both on the upside or on the downside of the market. Remember, it's not random, it's structure over speculation. Thank you.